So I had a number of people ask me about this NQ tweet, so I thought I'd take just a quick minute to explain what I'm looking at here. So NQ on Wednesday and Thursday effectively consolidated in this range, call it 314 to 440. This move up here, this is overnight, most of it anyways, but you're generally having this balance here, 314 to 440. And so when we break away from that value at the end of the day on Thursday, now that is objectively bearish, breaking away from value. If you're breaking to the downside, it's bearish, but it must be sustained. And so we come down here, and what people didn't realize is that, later on after hours, we bled out. And where did we come? Well, we came down and we swept Wednesday's low, and that puts us into the bull gap. So if you're looking at QQQ, and hold on, let me pull up QQQ real quick. So looking at QQQ, you can see the Thursday low didn't come anywhere near the Wednesday low, and that's because that move happened after hours. Nonetheless, this is the bull gap. So we sweep into the bull gap. We take potential liquidity here from any stops that might have been there from Wednesday, and we start to reverse overnight. Now, the next marker we're looking at is this 262.25. Now, that is the spike base from Thursday. So we spiked down, meaning we made new low of day. I mean, kind of barely. This is the last candle of actual regular trading hours. We just kind of barely spiked down, made a new low of day away from value. That in itself is usually a mistake, unless it's early enough and it's very clean. And then again, you still have to have continuation, right? And so then after hours, we come take that sweep. And so that's our next marker. So after this sweep occurs, if you want to try a long, that's reasonable here. You're watching out for this because this could reject you back down below and you're into the bull gap. And then, you're still kind of looking for longs in the bull gap, right? Because it's, it's going to be supportive until proven otherwise. But reclaiming the spike base comes up and it tests basically the bottom of value for those 2 days. And to me, this is really the last potential opportunity for sellers in here. So they can defend up in here, but then they're still going to have to take this back down and drive back away from value, leaving all of this up here trapped. Well, instead, you can see what happens is it sort of stalls just below, comes down, it holds the spike base. That's not great if you're short, right? And then cracks back above. I think there might have been some news or whatever. It doesn't matter. It was all triggered from this. And then once this happens and you're finding acceptance back within this value, and to me, I like to see acceptance by, what prices I'm rejecting. And so this lower wick is rejecting prices below this, right? And so once this happens, once you're back in here, this rotational move across to the other side is quite easy. And again, maybe this was supported by some news or something, but it really doesn't matter because once you're here, there's pretty high chance that you're coming up here. Now, so this, is this bullish? Well, this is a breakaway from 2 days value. So this is objectively bullish. Well, what if this move is rejected? Then it is not that bullish. In fact, it would be, pretty bearish, and we'd probably get sucked all the way back down into here. So, again, break away from value to the downside is bearish, not because price is going down, but because it is breaking away to the downside. So this move here, this isn't bearish. This move down from here to here, this is just balance. That's just normal. You should be looking to buy dips here. This move breaking cleanly away is bearish. Now it must be sustained. The rejection of that is actually quite bullish. This is bullish. This is bullish right here. And this is very bullish. So to me, it's not about, prices going up, prices going down. Certainly in here, it's meaningless. You're just going back and forth and you're getting some rotational trading during cash hours. And we can look at that cash hours and it's a little bit more clean right in here. So as opposed to, prices going down, it's bearish, and prices going up, it's bullish. To me, a failure from sellers is bullish and a failure from buyers is bearish. So that's how I see things.